candle of May 27th. Like
Right.
we've got to get out of that area. And if we get out of that area on the downside, it's going to be a nasty fall. It's not going to be pretty.
For sure. And the thing that I look at is, especially in these times, is the fundamentals behind it. So the technicals, we know where like the nearest targets are, but when you're talking about like on the weekly, how far down can this thing go? I always look at the fundamentals. And so we've been bearish since the beginning of the year, and they haven't even started taking money out of the economy. They just slowed down the amount of money they were putting in. Starting next week on Wednesday, they're going to start taking $100 billion out of the economy every month. I think they're going to try to go for a total of $900 billion taken out by the end of the year. And so all of that money getting taken out is going to slow down lending. Banks don't lend, businesses don't borrow, businesses don't hire, layoffs happen. And I think that's why we're going to go into a bit of a recession, and they're going to keep tightening. So that's just going to crash the markets even more. So we have a lot of downside room, but I can see this thing retracing.
Oh yeah, most definitely. Because I mean, it's when you're talking about falling down that far, you've got to have a little bit of retracement up to where you don't make the fall as bad as we're heading down from where we're at now.
For sure. I could see this thing pushing up, like even 33,700 or even a little bit higher before we keep dropping. If it breaks below this support, this kind of like daily support level at 32,400, then I think we can really keep pushing to the downside, at least these lows. So high, low, lower high, lower low, lower high. If we have one more push down or this thing retraces, we consolidate before we drop again. I still see a bearish summer. That's my guess.
Oh yeah, there's not much that's given us hopes for being the best economy and everything that we've ever been.
Yep. Oof. So still no entries. I'm actually thinking about taking this trade. So we have a massive liquidity zone down here at 470 or 450. And so if I deleted everything, we got this buy zone down here. I could see this thing bouncing out to the 88.6 and then recovering back up. So I'm kind of looking for buy entries here. If we break below and close down here, then on the higher time frames, just to kind of give you guys an idea of how I'm trading NAS. Massive daily buy zone turns selling. Right here. Support turn resistance, then is now being used as a buy zone. So if we break below and we close below, then I can see a retracement back up to like 12,550 or 12,600, and then we can short it down. So if we end up closing below, then we're going to be bearish. But if we just like wick out and close back in, like any of these previous times, wick, then we're going to push back to the top of the range, which is up here.
Yeah, I don't see that. I don't see it breaking out of this without any news. There just hasn't been enough volume for it to get out.
The only news I would say is the CPI data for tomorrow. So there's two big CPI prints happening tomorrow. There's the core CPI and the headline CPI. Those are kind of like a basket of the most used things in the consumer economy, or things that are just constantly bought in the consumer economy. They're expecting inflation to be higher. So the Fed is doing all this. They're taking money out of the economy. They're slowing everything down, and inflation keeps printing higher. That means they're going to have to get even more aggressive. So in my opinion, I honestly think that people are expecting bad news, and we might just start shorting early. So Stefano, that buy limit I sent you that never got activated, it went back and got activated. I'm going to send you the entry.
You're probably in profit right now. I like that extension right there. I think it's the negative 27 right there.
So I'm just gonna do a basic fib.
This is one of my favorite setups. Like this right here, it's like pretty much what I usually trade. I do like
Yep.
oh, sorry. Yeah. This
Yeah.
push right here, I like it. So it kind of like, you see, it got duplicated. So that's usually what I trade. So I think it may push up to a pullback. Like I'll be happy grabbing profits somewhere around here. So it just duplicated. Maybe a little more.
Yeah, I mean the 88.6 is where I'm heading. So 12,450. I have already started to scale in, if I'll be honest. But when it gets down there, that's where I'll put my biggest position.
I like it. I'm loans in gold too, 1845.
Let's go. Oh, I deleted it off my watch list.
You deleted that bitch out of there.
Well, I know you remember that.
I know you did. I know. You did it live too. You was like, nah, fuck that. I'm deleting this one. It's gone.
The thing is, I'm nasty though. I still got my levels, bro. This is a clear buy right here.
Yeah, 1845. That's why I took it. I actually sent out a signal for 1850, but we kind of got stopped out. So re-entries were 1845, which I booked. It was like almost 50 pips that I booked. So I'm holding that runner.
Quick break, retest 61. And right now it's at the 50. From here up to 1855 is good, but 1852 is that target.
Yep.
That next fib.
I like that rejection right there. And I don't know how you like that. That 1 hour rejection. I like that.
No, this is looking really, really good. Okay. Slight trade won't hurt.
And bro, like I'm telling you, I didn't take the NAS buys, but I did take the US 30 longs. I sent out this chart if you want to look at the Discord, but 32725 was the area. It's right there, like that shit just turn around right there on US 30.
Oh, same, bro. Look at this. That was off the longs for NASDAQ where I was scaling in. There's that rejection. Sheesh.
Oh, she's almost at 12.6.
Beautiful, beautiful.
Yep.
Yeah, that's like pretty much what I trade. What I like to trade. I pretty much I see the anchor leg on the first leg pushing up, then the pullback, and then on the internal structure, I just fib that extension. So this is my extension, and this is my anchor leg. So usually what I trade, that's what I usually trade. So this is my entry.
Yeah, bro. I'm going to close 2 of my entries that were a little bit early because what I've been doing is I've been scaling in. So I was scaling in as it came down and I was going to enter my largest positions here. Some of the entries that I have a little bit too close to where price is, I'm closing those off. This is what I'm personally doing, but I'm holding the ones that I got at the wick entry.
Nice.
I'm going to send you the screenshot, bro. Sheesh.
And this right here can definitely happen.
Yeah, those are my 2 zones. Like everything in between, if I had to just like clean up this chart, it would look like this. And even this. So my cleaned up chart looks like this. So here's a massive support area, massive support, massive support. Every time that we violate, break, and then retest that support, we have a pretty good chance of making it back to the top of the range. And then at the top of the range, we look to do the exact same thing, which is short. Now the short might be a little bit higher at like 850. So it could be this liquidity zone or this one, the light blue one. But for now, I am in longs and I am holding that position from 12,530.
The only thing that is, if you look at the daily and the daily closure, you know, engulf bodies, previous bodies, and then I'll be like weird about the shorts, but because literally it's ranging. So
It is. So here's the previous area of resistance, and price is forming that new support here, and it keeps rejecting. The only thing that would make me start looking for shorts is a daily closure where we fill these wicks.
yeah,
If
so
we
imagine
really
you get
feel-
a closure above these highs. That's crazy, you know.
It's not that crazy, because if you look at the weekly, do you remember that original idea I had where there's support, resistance, support, resistance, support, resistance? We can make it all the way back up here. You can see like an Elliott wave.
I see it. That's yeah,
Right there.
definitely.
So third touch trend line, 61.8, Elliott wave finish. So there is room for a recovery before we keep shorting, but until we get that, trade with the trend.
Absolutely.
But that scenario is still possible. 13,800, still very possible. But for this over here, it's really simple. Is if we have a candlestick closure that's like solid below these wicks, then on the first retest back up to this high, I'm shorting. So
Nice.
like this. Anywhere in the zone, if we have a body of a candle close in here, then basically just wait for the market to go down, retest back up at the highs right here, and then short.
Bro, are you seeing that NAS trade, bro? Like that's just nasty, bro. Like your entry is crazy.
It's at 630.
I tell you, man. I saw that shit, man.
Yeah, I mean, I've been putting it up. I mean, so was your gold trade. I'm about to check it in a second.
Yeah, I know. And I sent out the look at the my channel, the US 30 chart. That's what I'm in. I took the US 30 long, so
So I had this. It's basically been the same idea. Like you can ignore the arrows, but basically it was a retracement down to 15 or to 12,530. I've had that marker right here, break, retest, and then push all the way up to 12,800. So that's my base case. And as the market started shifting around, I kind of had different ideas. I kind of wanted it to go from here, but it just took a little bit of time.
yeah, that was your last idea when you posted it. I saw that one.
Yep. This was the original idea where I just wanted to see an inverted head and shoulders and then push up to 12,800. And then I checked the charts. It dropped and I was like, all right, if I see a rejection here, I might even take a long. And then next thing I check, market violates market violates right here. Just keeps dropping. And so I put the original idea back, and that was, that's where we started the stream. Yo, this thing is running right now.
Oh yeah.
Oh, sheesh.
I texted you, bro.
Yo, can we just appreciate this? It's a 0.1, bro. I've only been streaming for like 20 minutes. Now, I don't recommend this broker, but this is the one I'm using now. I'll have a recommendation for you guys in a few months once I make a withdrawal, once everything goes smooth. This is a broker I'm trying out right now. Courtesy of one of my friends. I'm not even going to say who that is yet. We'll see how the broker works out.
Who are you using now? NBFX, that broker?
NVFX, yep.
Yeah, I already made my day.
Yeah, I'm in break even. I closed. I see a comma somewhere in my profits. Yep, there's a comma in there. $1,000 a day keeps the 9 to 5 away.
It's always good when there's a comma in there.
Come on. I mean, MetaTrader doesn't actually put the comma, but you guys know what I mean.
It's an imaginary comma.
Yep.
It's the comma when you make the withdrawal because that's the only way to make profit.
Yes, sir.
Yes, sir.
Or you get rigged on the commissions on the way out and you lose a couple commas.
Amen to that.
Let's go. Let me see this. Bro, that you're up 12% or 13% for the day. That's how it's done. Sheesh.
Waited.
As my guy Solomon here just started trading not too long ago. He's been around me for years. We used to make music together.
Yeah.
Just started trading. He's been crushing it. It's 2 days in a row where he's up like 10 or 12%. Using small lot sizes, just be consistent. Good stuff. All right, so I still have a 0.05 running from 5:30. Let me do two things. I want to check the gold trade. And then I actually want to talk to you guys about UJ and GJ. It's something that's not really talked about. Obviously, you guys see how aggressive that bullish trend is. I'm going to show you guys why a lot of people are getting burned in this market because they're trying to short and they're trying to guess. Like everybody keeps thinking this is a trader's fallacy. Well, it just keeps going up. So at some point it has to reverse. That's not true. It actually doesn't have to reverse. And that gambler's fallacy of like, well, I lost 4 trades in a row, so this next one has to work. It's been bullish 5 runs in a row, so now it has to be bearish. That's just not how markets work. So I'm going to explain to you guys what the JPY is doing and how you guys can apply that to UJ and GJ.
And Roy, I've got to dip off. I got to take care of some stuff here with the fam for a bit. So,
my man,
I greatly appreciate you having me on, and glad I was able to make it. Normally, I don't check my phone first thing in the morning when I'm here at the house. So I'm glad I was looking at it, man.
I'm glad you were too, Andy. Appreciate you stopping by. We'll stay in touch.
Let's do it again. Let me know when James is good, and we'll give me just a heads up, and I'll be sure to be at the computer and have everything rocking and rolling. We'll have some fun with it.
Got you. Anytime. Sunday,
awesome,
the Sunday market open. We'll do something.
All right. Sounds good to me, bro.
Take it easy, boss.
Awesome, man. Much love to everybody here. Y'all have a safe day. Great weekend ahead. I'll talk to y'all soon.
Always great having guests on the stream. Always great. Like I said, James was supposed to be on the stream, but he's in the middle of a situation. Someone might have hit his car.
Miami for you.
Hope he's good. So here's what we're seeing. US, I'm just looking at US, or I'm looking at gold real quick. A cleaned up chart. I see this third touch on the trend line. I see this break and retest. Break and retest, 61.8. If you take that manipulation wick off, we'll do it like this. That's a good zone. So 2 things can happen. This thing continues to rock up to 54, or if it dips a little bit lower to grab some liquidity, I think it'll come down to like the 40 range and then just keep shooting up. That's where the 78.6 is. I am using FX Open's feed for this, so I actually don't even know if this thing's accurate. Let me get to a broker I can trust. Oh, I don't see any. I'll do Oanda though. Yeah, 78.6. That's another possibility if the gold longs start to break down and then just push all the way up. Let's do U30 real quick. Oh my God. Stefano, are you still holding the US 30 longs?
That's where I'm at. At 725, like somewhere around here. Yeah, 725.
Send me a screenshot. Let me see your entry.
Send you a screenshot.
Let me check this YouTube. He said, big love from Bored Ape Solana Club, the French ape. What's up? What's up? What's up? Yo, if you're in BASC, I think we sent out the Zoom link. Go ahead and check it out. If you guys don't know what BASC, it's the Bored Ape Solana Club. It's a very great community. It's an NFT project community and something that we at Chart Addicts are 100% behind. You guys know that we have our mascot, Benji, the Bored Ape, who is a Solana Bored Ape. So if you guys don't already have one, I would highly recommend you guys go grab yourself a Bored Ape. This is not financial advice. Please consult a financial professional, do your own research. But I personally own a bunch of Bored Apes, and I'm going to continue to grab more and help build out that stefano by having Benji the Bored Ape as our mascot. So welcome to all the Bored Ape Solana Club. All right, Stefano just sent me a screenshot of his entry, guys, and he's not joking. He literally caught the bottom. I don't know if you guys can see that entry. That's called a wick entry. That's what we do here at Chart Addicts.
Yes, sir.
Mr. Stefano Perez, my bad, bro. Hashtag badass trader.
Let's go.
Hashtag he don't miss. Hashtag it's the wicks for me.
It's the Wix. There's a bunch of hashtags there. Hey, yeah.
Also, Euro USD shorts. Euro USD shorts. Just want to give this to you guys.
Bro, I took your USD shorts yesterday, and I was like, damn, why didn't I hold that trade? But it went back to entry. So I said it was a signal sent, by the way. So we sent out the signal. Yeah, we right there. You can look it up in the signals. Go to signals. Then down.
Oh, we got to put below the educators. Oh, come on. Man.
So you'll see it. A little lower. Right there, right there. That's the sell.
Ooh, okay, I see this.
Yeah.
So I had a similar entry. I got clapped and break even. But I just re-entered a few shorts. Dude, I like this. You got a 107.430 entry?
Yeah.
My God, bro.
Yeah.
Guys, I'm very confident when I say this. I think Stefano is the best trader.
No, stop playing. I'll be saying that. I'll be happy.
Yo, real shit. We
Bottom half
are
of the East
witnessing
Coast.
a special moment in history right now. Tough market conditions. This man Stefano has been navigating through the storm like no other, bro. I've been watching that shit go down, bro. Been
Yes.
killing it.
Man,
all I do is I pull up
agree,
my
bro.
phone, I see if Stefano called a signal, and I just copy and paste. That's all I do. Most days, guys, I'm very busy. We got different things, different projects that we're trying to launch. And I'm just very grateful to have such an amazing trading team. We have Ryan on here. We have Gali on here. Stefano, of course. So everybody who's on the team, like when you have people around you that it's cool when you and your friends are learning together. It's like the blind leading the blind. When you have people around you that you can trust their opinions, and you can trust their perspective, it makes your life so much more stress-free. Like today, if I don't catch a trade and like I'm not really seeing something and I'm starting to like doubt, whatever I'm seeing in the market, Stefano can come in and be like, hey, I'm looking at this on US 30. I'm looking at this on gold. And that's how you guys can like, really use this community to your advantage, is figure out the few people that you can trust or the educators that you can trust and just figure out, okay, I'm going to be trading along with them based on their style. If you guys are swing traders, Omar is your guy. You guys want to be looking at that and learning how to navigate those markets, how to have more patience and things like that. If you guys want to get into intraday trading, especially gold, Stefano's your guy. You guys want to be really watching what he's doing, not just, okay, what entry did he just call, but like, why did he take the trade? The motivation behind it. Why did he reverse his entry? How did he close early? Why did he close early? And really taking on the lessons while you guys are around here. So a lot of great people in this community. I'm very grateful to be in this place. We got Jordan, who just joined the team. Very happy to have him. Jordan was in our community and he's now kind of joined us as one of the educators. Just goes to show, if you're really applying yourself, if you really have a passion for the skill, we have a spot for you here on the team. So there's like, I don't know, this is the best place I've ever been in, especially for trading. And we're going to keep the show going. Vinny said US 30 says Stefano had an entry at 32,725. Time to touch it and go. Yes, sir. Says waiting for a lower entry. There's always going to be a better entry, guys. Most of my trades when I'm trading on Thursdays don't happen until after 10. Right? So we're still hanging out here. There still might be one more entry. Price might come back to this area, like the 550 area, to grab liquidity. If it starts to wick back up, there's a potential entry there. Or if the market wants to come down to this final entry at 475, we can enter more positions there. Yo, my guy, what are you doing? My guy is up 27. No, this is like 20 or 30% on his account. Now, guys, I'm gonna use this as a learning lesson. I'm at the grill my boy right here on some bad decisions that he just made, and you guys are gonna have to learn this from as a learning experience. It's cool to make more money, but when you're up double-digit percentages on your account, it's time to walk away. Right? The whole goal of trading is to make money, right? You're up 10%, 12%, 15% on your account. As cool as it is to be up 20%, he also could have risked and lost all that money back. So at the same time, it's like, it's dope that he won today, but when you build that into a habit, maybe next time you're going to lose. And instead of winning an additional 10%, you're going to lose the money that you made that day. That's what leads to over trading, revenge trading, over leveraging, and things like that, which tend to be a spiral of negative account growth. Bro, stop trading. Delete the app. You're sick. He's over here just itching with the trigger fingers. Put the app away. You're up 30%. It's the game, y'all. It's the game. You have to build your own parameters in trading because it's endless. You could sit here and click the button all day, click the button all day. If you don't set parameters for yourself to say, after this percentage amount, I'm walking away from the charts, no matter what trade I miss, no matter what happens, if you don't build those rules for yourself, you're always going to give it back. $10,000 account, $100,000 account, $250,000 account, it doesn't matter. If you don't build the right framework for yourself, if you don't build the right rules and follow them, you'll always find yourself giving the money back to the markets. So find a target parameter. If I hit this, I'm done. Find a maximum loss. If I hit this, I'm done for the day. And stick to those rules. You got to be very disciplined. Yeah. We do this. No, those were entries since the morning. Okay. Come on, bro. Consistent profits. Consistency. All right. I tell myself the same thing every day when I get to the charts, which is I'd rather have, like, I'm praying for consistency more so than I am for short bursts of motivation or short bursts of like lucky home runs every once in a while. I want to be the trader that's consistent, that can consistently pull money out of the markets. I don't have to be right. I don't have to hit slam dunks. I do not have to hit home runs. I want to be the trader that's consistent. All right. And that's the most important thing is I'm consistently profitable because I pull out blues and I walk away. And if I'm wrong on this trade and the market comes back to reverse, at least I pulled out profits along the way. And the most important thing that I've done is be able to build rules for myself on how I'm going to take profits out of the market when I'm actually in profits. A lot of people, they see blues on the screen and they're like, oh, I'm just going to keep randomly holding the TP. This magical number I put up on the chart, it has to hit there. All of a sudden, you're up 10% on your account. You haven't closed anything from the trade. You have to start thinking about that in your trading plan, which is how am I going to methodically exit the market? If you haven't considered how you're going to get out of the market and you're just kind of like, oh, it'll just magically hit this random line on my chart. And it always gets that close and reverses on you. And you can't figure out why you're not making money, even though the market's always going your way. It's time for you to build rules, right? So trading is more than just click the button and hold the TP. It is a lot of managing the trade. Managing the trade, you can pull out money and still be wrong, right? I can be wrong on a trade and still be profitable. Isn't that crazy? The market is not going long right now, and I still made a bag. It's interesting. Now, look, let's go through Recession Watch real quick. I just want to update everybody on Recession Watch. Europe is dealing with something very, very weird, like something we don't see in economics very often. They're in a recession. All of the indicators are showing that they're in a recession. Manufacturing is down. Supply and demand is down. Their GDP is declining. employment is declining, and they have a huge inflation problem. Inflation is actually worse in Europe than it is here, as bad as it is here. They're heavily reliant on Russia for energy. Now they're overpaying for energy, and they're paying more for gas than we are, because Russia's their neighbor. They have to, like, they're financing Russia's war, and so Russia's put a premium on their oil, and the rest of Europe is basically funding their war. It's fucking crazy to think about. So Europe is dealing with that. They're about to start. They keep quantitative easing, which is not a good idea for them, in my opinion. They're thinking about raising rates. So basically, like, Russia or Europe wants to go into a recession. They're like doing everything possible to send themselves into a recession. That shit will bleed over here, because they're going to have to start charging more for exports to get things moving. We're going to end up paying those premiums on things like cars, food, wine, exports, not like the necessities, but things that are still important in the overall consumer economy. We're not really beefing with China right now, so thankfully, because China can't afford any mishaps. They don't want any part in this Russia situation. They need to keep trade going in order to provide food, water, and energy for 2 billion people. So we're not really dealing with any issues there. But the Russia situation, that's the one thing this summer that could provide enough volatility for us to actually have a lit summer trading. Right now, things are extremely slow because nobody wants to be the first mover. Nobody wants to keep dumping their stocks this low into the market. Nobody wants to start buying up too early and get burned in the dip. So people are kind of at a stalemate. All it takes is one fundamental event. For me, that event is next Wednesday, when the Federal Reserve starts taking $100 billion out of the economy. So I was referencing this earlier, since January of this year, we've been seeing a massive correction in the stock market. It's been dropping off the back of the Federal Reserve raising the cost of borrowing money. Now, when they actually start taking money out of the economy, that's a whole different story. That's when banks, they stop lending out. So here's exactly what the Fed is going to do. The Fed bought a bunch of bonds from these banks, from the 6 largest banks in America, which is Bank of America, Wells Fargo, Citi. Now it's like Truist, which is like BB&T, and SunTrust is like merger, whatever it is. And they bought a bunch of bonds, treasuries, and stocks, and then they gave them cash. Now, when a bank has too much cash and is overcapitalized, they go start lending for a very low rate. So businesses get funding, consumers get funding, people who want to get a mortgage get funding, consumer loans like cars and other shit get funding. Now, when you start taking money out of the economy, what the Fed does is it forces these banks to buy that shit back. So they're like, all right, Bank of America, you're going to buy $100 billion or $50 billion or $25 billion a month of these bonds, junk bonds, mortgage bonds, treasuries from me, and you're going to give me cash. The Federal Reserve forces the banks to do that. So they're like stealing money from the banks. Now the banks are drying up. They don't want to lend to just anybody. So you're only the best creditors get lent to. They charge a premium on how much they're lending, and they just don't do as much lending. So overall, the economy slows down. If businesses can't get lending, they can't go hire people. They can't do projects, research development, any of that shit. So that's basically the situation that we're in. They are slowing down the economy in order to stop the rise in prices. In order to do that, they're going to crash the markets. And that's kind of the situation that we find ourselves in. So if price holds here, and if price continues to wick up, this is going to be a great entry for longs. But if the price closes below the body of these candles, then it's going to push to a lower level, in which case I'd want to be out of the trade. My entry was at 530, the original entry, and that's already in break even. I'm considering entering another position here. The only thing is, I feel like we can dip lower one more time, down to 475 before we push, just to grab liquidity. So, I mean, if anything, you guys can scale in right now, which is probably what I'll do, is I'm going to start scaling positions, which means I'll put a small position right where I'm at now. And then if it dips lower, I'll put larger positions at the bottom. You never want to put your larger positions here, because if you get put in drawdown, you're going to be in some serious drawdown. You want to put the smallest positions at the top. And then as the market retraces on you, you can put larger positions towards a better entry. Then when it wicks, then you can be in a pretty good spot. when the market pushes back up. So I just grabbed 2 entries, one at 12,600 and one at 12,609. I want to hopefully get one more entry at 590. And then if the market dips lower, I'll put my really, really big positions down here. So that's 12,475. That's the potential buy entry at the bottom. So far, any comments, questions, concerns on the recession? Any questions about what you guys should be putting your money in or anything like that? I'm not going to give financial advice, obviously, but I can give a sense of direction, which is what I'm doing with my funds. And so if there's any questions that you guys have about the stuff that I said, how it impacts crypto, dollars, anything like that, just put it in the chat and we can get to it. Just off that entry alone, I'm in a bit of profits. I could close these and just sort of bag it or put them in break even. What I'm going to do is I'm going to close one of them and just leave the other one running. That one of those positions at the very, very bottom, that's the one I'm still holding. It's a micro lot size. So I'm basically out of that trade. Yep. So I closed one of the positions, and guys, you guys can see I'm running with one hand, so I'm moving a little slow, but I still have those 2 positions. One of them is a 0.01. That's a micro lot size running from the very bottom, which is all the way down here. And then I have another one that I entered somewhere halfway through this wick. I wish I could have got a better entry, but sometimes I need to see the rejection to get confidence that it's a good trade to push up in that range. And so I waited for a bit of a rejection, waited for it to retrace a little bit and push down. I entered halfway, and now it started to wick back up. So 2 things can happen. It's going to come down and hit my entry. And actually, I might put it in break even here. Just because I'm already up for the day. I don't want to give back any profits. And so 2 things will happen. It'll come down and fill the wick and kick me out. And then just keep going down to the second entry. Or it's going to come down, play around here, and then continue pushing bullish. That's what I see. I see a bullish move. I see we have a huge bullish bounce right here. That's the impulse. Then we've had a retracement. And then now we're just sort of consolidating before we make our next push. It's shaking out a lot of traders. So scaling entries in for the continuation up to 12,800. That's what I'm looking for. So how does all this affect the JPY? Oh, yeah. Let's talk about GJ real quick. So I've actually opted to not put this in break even because I feel like it's going to play around the range. I've put my stop loss below the body of these candles. So 12,530. I put it at 12,525 just because you guys know how the brokers are. And I'm going to let this thing ride. If it comes down and hits my stop loss, no problem. I'll have a re-entry waiting and I'll be able to capitalize on the re-entry. So JPYs, Bank of Japan is crashing their currency in order to save their government bonds. So they're printing more money and they're making the cost of borrowing even cheaper, which is very negative for a currency. And they have to do it in order to save their economy. So they're printing a bunch while the rest of the world is doing the opposite. You guys can see America, instead of printing more, we're starting to take money out of the economy. Europe, they're actually starting to take money out of the economy. Not that it's smart, but they're doing it. And so Japan is doing the opposite. And that's when you have divergence. That's when the US dollar is going to continue pushing bullish and JPY is going to continue bearish. That's why if you're trading UJ, all you've seen is a massive push to the upside. You guys see this? This is the most straightforward trend you can trade. So right now we're in a bit of a retracement period. The market has already pulled back. I think this is a pretty good place to look for entries, if I'll be honest. You can either wait for like a retracement here and a continuation, but basically, guys, you see what's happening here. Bullish impulses, retracement, bullish impulse, retracement. And now we're going to get ready for a next bullish impulse. How do you find a target? Fibonacci sequence. Boom. Bottom to top. Yep, that was left-handed. And then negative 27 extension, 135.1. Okay, so that'd be my target 1, and then target 2 would be a potential area on the higher time frames. So dollar is pushing bullish and the JPY is crashing. When you have those two things together, that's when you get a very, very aggressive trend. Same thing on GJ. We had a nice pullback. Price is playing around the zone right now. So, I mean, two things can happen. We retrace back down a little bit more and you guys buy the dip, or this thing gets stuck around 167.5, and that's going to be a re-entry area to continue the longs. So 167.5, stop loss is below 166.5, about 100 pip stop loss. The take profit is going to be about 169. So you're basically risking a good 100 pips to make 200 to 300, depending on how far you're holding that swing position. GJ is not stopping. This is a trade that if you guys learn nothing from me, for 3 to 5 years, GJ will continue bullish. And so as long as you're looking at the higher time frames and you're finding pullbacks on the higher time frame and trading those pullbacks and holding, you're going to be in profits if you're trading the long side of this trade. All right. So let's see what's going on with NASDAQ, still holding these longs. If it dips down lower, I can actually put a real size position. I don't really want to be playing with micros, but I put in micros when I'm scaling, because if I ever get into like 1, 2, or 300 points of drawdown, I don't want to let the money affect my decision making. And so I'll put very modest lot sizes on the way down. So even if I get into drawdown, I can still think rationally about the trade, find my next area of interest, and enter a big position there so I can scale out of the position. Or I can just enter the position there and make my money back, even though I'm in drawdown on those top entries. My guy, golly, bro. I see you crushing it, fam.
Yeah, I got took out of break even, but I think I'm done for the day.
You're still up a couple percent, bro. You're good.
Yeah, I hit my goal.
That's what you need. That's how we do it, people. 2.5% a week is 10% a month. Not really, because we all know how compound interest works. If you compound 10%, 10%, 10%, it's actually more like, or 2.5%, 2.5%. It's probably closer to like 11 or 12% a month. But that's basically what my goal is. If you can make 1% on a trade or 2% on a trade, you basically almost hit your weekly goal. You do that twice a week, you can make 4% a week. You're going to understand with the funded accounts, if you have a 200K funded account and you're making 4% a week, that's 16% a month, or closer to 20% a month if you compound it. That's a lot of money, right? So that's 20K, 40K. That'd be a good $40,000 a month if you make 4% a week. It could be $20,000 if you're trading the 100K funded, or it could be $10,000 a month if you're trading the 50K funded, just off of making 4% a week. So imagine you guys took 4 trades a week. You risked 1% to make 3%. Who here feels confident that they could hit 4% a week in trading?
Let's get it.
I'm being serious, yo. Some of you guys need to like rethink your entire life sometimes, and just be like, all right, maybe I'm over trading. Maybe there's a better way to do this. Can I make the same amount of money off of risking less, or can I make the same amount of money off of putting all of my risk in the same place? Like if I'm going to take 10 or 20 trades in a week and my overall risk was like $1,500 or $2,000, Can I risk that on 3 trades or 4 trades instead of taking like 10? The answer is yes. So I'll risk it on 3 or 4 trades, and I'll just be looking to make back 3 times as much. So if you win all 4 trades, you're up 12% that week. 12% that week. If you take all 4 trades. If you lose 3 of the trades and you win 1 of them, you still break even. So if you have a 30% win rate, you still at least break even. Anything more than a 30% win rate and you're in profit. So the goal really is, like, on most weeks, you'll lose 2 and win 2. So if you're risking 1%, you'll lose 2%. But if you win those other 2 trades, you'll make 6%. Net, you'll have 4% that week, which is your goal. So you could lose 2 of the trades, win 2 of them, and still make 4% that week. So then why are we taking 20, 30, 40 trades? You know, why are we doing this? A lot of people, it's because you think that the more work you do, the more money you'll make. That's the conditioning. That's the way we grew up. I'm here to let you guys know trading is not that kind of game. Trading is not about how much work you do. The more work you do in trading, the more likely it is that you're going to lose money. And that's why it's so difficult for people to be successful at this game, because in my normal life, right, I also run Chart Addicts. And that is a game of the more I do and the more we have speed and the more direct we are and the more we just like hustle, the more gets done. In trading, is the exact opposite. If I sat here and took every single time the market dipped down, I was catching an entry, chasing an entry, trying to do the most, I'd be losing money left and right. So you have to let the market come to you. We entered in the middle of this range. It was a risky entry. We understood the risk, and the market's going to do the rest of the work for us. Now that it's pushing up, I'm in profits on my positions, and I have a choice, right? How I manage these positions, if I close them all in blue, I win, even if I'm wrong on the trade. So that's kind of like that's the way that I'm thinking about trading, is like, I don't need to force anything. If I'm in profits, I have the choice. The choice is always with me. I'm not really too focused on what the charts are doing. I'm trying to work less and get the most out of it. If I'm in profits, I'm trying to make sure I walk away in profits. Simple as that. How do you alter where you're looking to invest depending if the market is up and down? So most of you, 99.9% of you, should be holding your investments. Very certain circumstances, you have to, like, you know, put a down payment on your business or something like that. You can sell in and out of your investments in a smart way. The best way to make money is to buy stocks while they're down, and to buy cryptos and stuff while they're down, and to buy assets while they're cheap, and then just to hold them for 20 years and don't fucking touch it. That's how most wealth is created, because most wealthy people don't need the money. Their money sits with a money manager or with an investment banker or with an investment banker fund or a family office, and they just compound it every year. And that money just sits there and gains 6, 10, 15% every single year. So what you guys really need to do is find things that you believe in, right? I use Apple products. I have Apple, I have an iPhone, I have like 5 iPhones. I have like AirPods, I have the watch, I have the MacBook I'm using. I like Apple. Right now, Apple is cheap. All right, let's go look at Apple stock real quick while this NASDAQ trade pumps for us. We'll come back and check that in a sec. But we'll do Apple. Where's Apple at on the weekly time frame? So Apple is down significantly from the highs of, I can't read the date. Boom, from back in December of last year. December of last year was the very high of the stock market bubble, and everything's been retracing since. This is why we're seeing a decline in the indices. The indices represent a basket of the top tech stocks or the top industrial stocks in the country, Apple being one of them. So if Apple is dipping, so is the whole index. But let's say that you love Apple and you're watching this shit last year, and it's the summer of last year, same time last year, we're at the same exact price as where we were in June of last year. Crazy. And you're sitting there last year, you're like, oh my God, Apple's too expensive. Apple's too expensive. I don't want to buy Apple stock. I don't want to buy Apple stock. And then fucking December of that year, you're up goddamn, I don't know, like 60% on the stock price. You put in $1,000, now you're standing at 1,600. You put 10,000 in, Now, all of a sudden, you're sitting at 10,000 or you're sitting at 16,000, right? So you could have made 6K just basically holding this thing. So right now, prices retraced all the way back to the price in June that you thought was too high, but you're like, oh shit, I should have bought there when the market was that high. That's a discount. It's the definition of a discount. So if you believe that Apple is going to be here in 5 years or 10 years, if you believe that Microsoft's going to be here, Tesla, Netflix, all the names that are down 60% from their highs, if you believe they're going to be here in the next 5, 10, 15 years, you keep buying the dip. You buy the dip here. If it dips down to 135, you buy the dip. And if it dips down to the pre-pandemic lows, you buy the dip. And then when the market rebounds in 3 years, 5 years, 10 years, and it's sitting up here, you look like a fucking genius because you were loading up at all these different positions. The only place that doesn't apply is when you're trading on MetaTrader. When you're trading with something called leverage and margin, you don't want to keep buying the dips because you don't have unlimited account balance. You see what I'm saying? You can't just keep buying the dip because on margin, you'll get margin called. But when you're buying just straight up, you can go to Robinhood or you can go to Charles Schwab or TD Ameritrade or any of these platforms and just enter the trade and just hold it without any margin. That is how everybody should be investing if you're looking for the long term. This is not financial advice. Please consult a financial professional. Even though I have my series license, I am licensed to give financial advice. Just throwing that out there. So we're in profit on the NASDAQ trades. Let me know, quick show of hands, who is in with me. I'd be lying if I said I didn't enter another position after I closed partials. But I did protect it. We are running long positions on NASDAQ. Let me know who took the trade. $2,219 of profit on the day. I'll post this for the Chart Addicts. I'll post this for you guys in the chat. Like I said, I'm not recommending this broker, NVFX. I am using them as of 2 weeks ago. I really like their spread so far. Ted just texted me, sorry, got a meeting with SpaceX. All right, that's only a text that I'm going to get from Ted. I sent him the link for the Zoom. I'm like, because he got on last week. I was like, bro, you're a huge hit. You should get back on this week and come spit some game. He said, sorry, in a meeting with SpaceX. Guys, that's the kind of conversations you want to be having. If you text your friend and he's like, sorry, I have my dick in my hand. I can't come trade with you. Wrong friends. Wrong friends. All right, I'm about to hop off the stream here. Let me give you guys a few pieces of insight on what I see on U30 and gold, and then we can call it a day. So US 30 is still creating higher lows. Here's the low. Here's the higher low. We've had a double bottom rejection of the 78. This thing might play around before it pumps a little bit higher. But if I'll be completely honest, if we fill this wick on the 1 hour, we got about 20 minutes left of the 1 hour time frame. If we fill this wick to the downside, this thing can keep pushing down to 32,570, which is where you'll want to take your longs at US 30. 32,570 with your stop losses below 32,470. So about 100 pip or 100 point stop loss, which is really good for U30. I would give it 120 or 140. That's the average stop that I would use for U30. And that's the reason I don't trade it. All right, 140 point stops, it's like, baby, that's 1,400 pips, right? So trade this at your own discretion. If you're a U30 trader, you know exactly what you're looking at. Bullish impulse, retracement. The next move is up. You guys know the drill. GJ. If you bought, you bought. If you didn't, then you're just, you know what I'm saying? Just don't trade GJ. This thing is going to go long. It's going to continue up to the 170 level, 171 level. Look for retests on the higher time frames. That's how you trade GJ in today's market conditions. Bitcoin. That's the one thing that everybody keeps asking me. I have family members overseas. Roy, Bitcoin. Roy, 30,000. Roy, Bitcoin. Same advice I gave about stocks. Buy the dip in small increments. And as it dips and gets dippier, you keep buying the dip. Don't put all of your money in right now. put some money in right now. If it does go to the bear case scenario, oh my God, Roy, Bitcoin's going to go to 22,000. What are you going to do? Well, I'm going to buy more because I didn't put all my money in at 30K. I've been slowly putting my money in at 40K. I put my money in at 35. I put a bunch of money in at 28. I'm going to be honest. When it hit 28, I loaded up pretty big on Bitcoin, but I still have some cash. So take out your notes. I want to leave you guys with 3 pieces of advice for the recession. Then we're good to go. This is not a joke though, for real, guys. This is for your notes. You guys will really want to take this down. All right. First, and let me know when you guys are ready. First, cash is trash until the market's about to crash. Rule number 2 about a recession. He who has cash in a recession is king. Roy, is cash trash or is cash king? If you have cash in a recession, you're goated. You're going to increase your net worth by at least a decimal, by at least a fucking like a digit at the end of your net worth in this next recession. Maybe two digits of your net worth if you have cash in this recession. The business owner that has cash in a recession can go buy his competitors that are weak. A trader who has cash in a recession can fund an account and can take advantage of the volatility. Right? The person who has cash the investor who has cash in a recession can buy the dip on all these undervalued stocks. The crypto trader, the crypto investor that has cash in a recession can buy all these NFT projects and all of these cryptos that are now in the dirt. Everybody thinks that they're trash now, but they're really just sitting there waiting for someone to buy them up. If you have cash in the recession, you are king. You have about 6 to 8 months to basically buy shit up at the dip, people, before the market recovers. We might have an extended recession, in which case that is your chance to keep loading up. Well, Roy, I don't have cash. I'm living paycheck to paycheck at my job. My job doesn't pay me enough to invest. Can you save money or cut costs anywhere in order to have investment money? If you can't cut costs fast enough because you're already living at your means, can you increase your income? Can you go get a secondary stream of income? Uber Eats, Craigslist, tutoring online, anything that you can sell as a personal service. Go fucking flip furniture on Facebook Marketplace. So if you can go get extra cash and invest in this dip, you can be king. Is what I did in 2017. That was my first come up. That's what I did in the 2020 pandemic. If you guys go read my articles, when I was writing fundamentals articles in 2019 and 2020, I was urging everyone to buy Bitcoin at 3,000. And when I wrote the article, I always included the price of Bitcoin at the moment in the article. First of all, if you guys haven't checked out my recession article, I'm explaining how the whole recession is going to play out. Don't sleep. It's on the website. I think this is why everyone should own Bitcoin. I think this is the crash. Nope. Pandemic aftermath. Crypto comeback. Why Bitcoin? Why now? It's one of my favorite articles I've ever written. It was written in April of 2020. Let me show you guys what the Bitcoin market looked like in April of 2020. I'll show you guys this. Somebody help me find April of 2020. That's March. That's April 10, right there. It kind of looks like the bottom of the market, right? So in 2020, after the pandemic happened, they were about to start printing money. I saw this in advance. I saw that the Federal Reserve was going to start printing money, and I started to invest heavily into cryptocurrencies. And because of the decisions that I made in 2020, I was able to do something very incredible with my life, like fund different accounts, travel around the country. I was able to invest in myself and in other things. I was able to use some of those funds on the FX Summit to invest in the FX Summit. So you guys got to understand, like, making these investments in times where the market's low and it's undervalued is very important. So right now we're seeing another one of those. We could either chill at 30 or we can go all the way down to 20,000. But either way, as the market dips, you want to be buying that dip. So when it ends up back at 60 and at 100K at the end of the year, you're not left with your dick in your hand. All right. Does that make sense to everybody? Before I get off the stream, I want to make sure that we're all on the same page about where the economy is headed. Now that we're in a dip in the crypto markets, it's a great time to get in. I can show you guys all these different coins that on a historical basis are completely undervalued. Look at this market cap. The overall market cap was $82 billion in Solana. Right now, the market cap's at $13 billion. Right? Everybody wanted to have invested in July and May of 2021 when it was up here. Now that it came back down here, everyone's like, oh, something must be wrong with it. Everyone's dumping it. It must be a shitty investment. These are discounted investments. That's the way I think about them. Solana, my sweetheart, my baby, XRP. Every time this thing hits the floor, like 2017, we got rich off XRP. Then the market went dead for 2 or 3 years, and we were buying the floor. Then we shot back up. Nobody could sell because they were in the middle of a lawsuit with the US government. But now they're about to get out of that lawsuit and they're going to be available to trade on all platforms. That's what's going to go it's going to go ballistic for the XRP market. It's a great investment, high quality technology. It's been around since 2013. And in my opinion, it's going to stick around. And so this is something I will buy at the dip. Ethereum. What the hell was that? Ethereum futures. Why the hell does the CME, the Chicago Mercantile Exchange, have Bitcoin futures? But they don't even have a Bitcoin ETF. Like, you can bet on people betting on Bitcoin, but you can't buy or bet on Bitcoin. Makes sense. Ethereum has seemed to hit a floor at the 200 billion market cap range. This is the point, man. This is the point where if you're not loading up in 6 to 8 months, you're going to be in for a surprise. This is not financial advice. It's not financial advice. Please consult a financial professional and please do your own research. So ladies and gents, I'm about to hop off here. If you're a Chart Addicts member, we are launching the advanced coaching program here shortly. We have about 5 days until the advanced coaching program begins. It is a $5,000 coaching program. If you're a Chart Addicts member, you've been here for longer than 3 months, you get a 50% discount on the advanced coaching program. If you want to learn how to trade, come trade with one of our coaches live for 30 days straight. You share your information with us. We will find the patterns in your habits in your trading and improve those and make specific adjustments to get you on the road to success. So if that's you, if you're looking to make a change in your life and you're looking to commit, $5,000 is not cheap. I don't care who you are. It is a commitment. And if you're looking to make that commitment and you're looking to make a very serious step, I can ensure that you're either going to make serious progress or you're going to find out trading is not for you. Either way, it's going to be money well spent. I look forward to seeing all of you guys in the advanced coaching program. Second, we are launching the Enigma Signals app on Sunday. It's not available for download yet, but it will be next week. That's where we're going to be sending all of our signals at Chart Addicts. If you guys know, we've been sending signals at Chart Addicts for years. You guys can go and track all of the signals that we've sent throughout the years. We have, I think, our 2020, 2019, and 2021 signals results. Nobody has tracked their signals over the years as they flipped from one company to the next and they evolved and their company changed names 5 times and all this stuff. You can see the progress in our signals results and see how consistent we are at providing quality signals. So you guys can go in here and check out those results. They will be available on the Enigma app. So you'll be able to track our performance in real time. The results don't lie. And so I look forward to seeing all you guys, and special treat, 30 days free for everybody who downloads Enigma next week when we officially launch. 30 days free to use the Enigma Signals app to trade along with myself, Stefano, Mario Mello, Joseph, Omar, Ryan, and some of the best traders on our team. Okay. Will we have access to the FX Summit recordings on the website? The answer is yes.
Did I just hear the word free signal for 1 month?
Signals for 30 days.
Oh my God.
It's 97. Chill. It's $97 a month. All right. That's one trade, people. That is one quality signal from the Chart Addicts team.
If you ain't signing up, I don't know what y'all doing.
That's the play. All right, ladies and gentlemen, an hour 45 minutes. That's enough of you guys, or an hour and 15. That's enough for you guys listening to me talk. The zone I'm watching for re-entries, if this thing breaks the low, is 12,450. And so it's longs at 12,500 and shorts at 12,800 for NASDAQ. All right. Happy and safe trading, everybody. If you're on YouTube, I will see you later. ChartAddictsFX.com. ChartAddictsFX.com. That's where you'll find us. ChartAddictsFX.com. I'll see you guys later. Take it easy. Peace. All right. Stream is over.